Well, hi guys, welcome to this Moneycontrol live stream. You're watching Stocks for the Next Innings with me, Nandita, Khemka. Well, in the last few episodes, we've focused in on a lot of sectors like consumption, like telecom, like power as well. But today, the focus is on the healthcare space. Jupiter Lifeline Hospitals, that's one stock that's in focus today. It made a very strong debut on the bourses back in September 2023. In fact, the stock listed with 30% gains and has given returns of somewhere around 20% since its listing. So basically, we are highlighting stocks that are poised to do well in the Modi government's third innings over the next 3 to 5 years. What is the prospect of this stock? How is it stacked up? Let's do a deep dive analysis on why this stock could actually emerge as a healthy portfolio bet for the next 5 years. Of course, before I introduce my guest, just want to give a small disclaimer. We are not really advising investors to buy the stock or giving a call on the stock. We are just highlighting the positives and negatives surrounding stocks, and that could help you make better investment decisions. Of course, you will have to consult with your portfolio advisor or investment advisor before making a call on whether to buy a stock or not. But then let's do a deep dive on this particular stock. Then joining me for that purpose is Param Desai, who's a research analyst at Prabhudas Lilladher. Param, great to have you on the show. Let me first begin by asking you, why would you pick a stock like Jupiter Life Hospitals? Why would it really qualify as the best place in the healthcare space for the next 3 to 5 years?
Okay. If you see post-COVID, a lot of structural tailwinds have been seen in the hospital space. We have seen insurance penetration been going up. We have seen that lack of infrastructure from the government side has basically been articulated well in the private market share has been gaining the market share. We are seeing a lot of consolidation happening from large corporate hospitals. So last 2-3 years, I think that trend has been visible, and we see most of the large corporate hospitals are in a sweet spot to further garner the market share. And more important, most of these listed hospital companies are doubling up their capacity in the next, say, 4 to 5 years, I think, which augurs well for the space per se. And in that construct and in that view, we like Jupiter Life Hospital, which is very sweetly well placed with the Western-based hospital company, I think, which is also been doubling the capacity in the next 4 to 5 years.
Right, we will talk about the expansion plans of the company that they have highlighted, but let's first look at the financials. The company, of course, used its IPO proceeds to retire its debt, and that resulted in saving in terms of interest costs as well, right? So going forward, what is the kind of profit CAGR that you would be envisaging for the company over the next say 2 to 3 financial years, FY25 to FY27?
Yeah, so if we see the profitability wise, we are building in an EBITDA CAGR of around say 22 to 25% in the next 3 years. Given that the depreciation interest is largely, they do not have any leverage on their balance sheet, so interest is largely been flat. The PAT growth would be upwards of plus 30% for the next 3 years.
All right, plus 30%, that's quite strong. But let's also talk about the occupancy rate, right? In FY24, the average occupancy rate of the healthcare company rose by somewhere around 130 bips to somewhere around 64% compared to the previous year. Now, Indore facility saw less than average occupancy. So, is the company taking steps to ramp up occupancy levels there?
Yeah. So, if you see, they have 3 units currently operational, one Thane, one in Pune, and one in Indore. Indore was got operationalized in 2019, just before the COVID. So still, it's generally a hospital takes 2.5 to 3 years to say ramp up. So I think most of the things are in the place. Most of the clinical talent, what they need to hire at Indore, are already in place. They have also empowerment with a lot of insurance players over there. So that has already taken place in the last, say, 6 to 9 months. And as we speak, that will now aid to higher occupancy level going forward from Indore unit perspective. So Indore, I think currently they will be enjoying an occupancy of around between 50 to 52%. I think that number can inch up to around 60-65% over the next 2 to 3 years.
Okay, occupancy levels expected to go up where when it comes to the Indore facility. Let's talk briefly about the expansion plans as well. The company has laid out its expansion plans. The Dombivli project for 500 beds in the MMR region is underway, and as per management, it is expected to get operational in the next 2 to 3 years. How much of capex spend is the company undertaking there, and what kind of revenue contribution have you factored in for this?
So this is a 500-bedded facility. The company owns the land, and roughly around 1 crore per bed is the capex. So around 500 crore capex would be utilized for this project. I think this project will get commercialized by second half of FY26. They have already spent around 300 crore plus kind of capex towards this project. So another 150 to 200 crore is spending towards the Dombivli project. In terms of say revenue, I think generally this is a greenfield project, so it will take 1.5 to 2 years to break even at EBITDA. So we are building in around say 10, 15 to 20 crore kind of losses in FY20, second half of FY26 to first half of FY27, and then we see the ramp up in the facility. It will reach to around 45-50% occupancy within its 2 to 3 years kind of operation. So just to answer your question, I think we are building in around 15 crore kind of losses in the first year of operation.
They've also finalized a second unit in Pune with 500 beds. Management has indicated that they will be funding it internally, and the company is of course aiming to double capacity to 2,500 beds in Western India over the next 5 years. Is the company on track to deliver with the ongoing plans, and could it look to actually expand to other geographical regions as well, or do you think Western region would be the mainstay?
So for the next 4 to 5 years, I think their primary focus will be on more on the western part of India. They currently have 940 bed capacity, of which in existing Indore they can add another 150 to 200 beds. So that will take to around 1100 to 1150 bed. As you said, 500 Dombivli will come up by second half of FY26, and the Pune, the new facility of another 500 will come in FY27 end. So 1000 bed of addition they will be doing in the next say 3 to 4 years. So that will take them to around 2000 plus beds, and they're also exploring to add one more facility in the western part of India, maybe in suburbs of Bombay, or maybe one in Gujarat. So they will be adding one more facility that will take them to around 2500 in the next say 4 to 5 years.
Okay, and what about price hikes? The company took a price hike of 5% in the self-payer category across units in the fourth quarter. Do you expect any aggressive inflation-related price hikes going forward?
So if you see, the company's payer mix is extremely extremely pretty well as compared to some of its peers. They have 50% from cash, around 49% from insurance, and just 1% from the government schemes. So in terms of payer mix is very favorable, and that will always keep the ARPOB healthy. Yes, they have taken 5% of price hike towards the end. Generally, a hospital company takes one or twice price hike in a year, depending upon the competition, depending upon the market. So I think 4 to 5% is the price hike I am envisaging in my numbers for the next 2 to 3 years.
Okay, 4 to 5% kind of hikes, kind of hike rather, factored in. But let's also talk about the insurance contracts that it negotiated, right? It boosted, their average revenue per occupied bed. But do you expect more such steps to boost the ARPOB, which is, I think, a little lower than than its other peers? So in terms of ARPOB, what are your estimates?
Yeah. So if you see, ARPOB is a function of price hike plus your case mix and any other factors. So price hike could be a function of around 4 to 5%. And another say 3 to 4% would be a combination of better case mix, which will get evolved. So generally 7 to 8% is the ARPOB increase what we are factoring in case of say Jupiter. And as some of the insurance gets employment in Indore and in Pune, I think ARPOB growth of around 7 to 8% on an annualized basis is sustainable in my assessment, which is the historically been the case.
So with that kind of ARPOB growth, will it be at par with its peers, or will it still be lagging behind peers?
No, it will be in line with the peers.
Okay. All right. Let's also talk about the net income growth, which has been quite high when compared to the industry average growth of 30% over the last 5-year period. So what's driving this? Because ROE wise, it's at 14 to 15%, not that promising, even though it's similar to the industry average of 12% or thereabouts. So what kind of return ratios are you factoring in now going forward?
So if you see, they have recently done an IPO, so a lot of cash was sitting on the balance sheet. So that has basically diluted the ROE, ROC. As this capex gets fructified and as some of this new facility gets ramped up, I think 18 to 20% kind of ROE, ROC could sustain from a medium to long term perspective. That is the number which I'm looking out for the company. And as one needs to also appreciate that they also own the land wherever they operate. Unlike some of the peers, they will be operating on the lease. So that also will have a slightly diluted ROE, ROC than some of the peers. But 18 to 20% is the number which I think can sustain over a longer period of time.
Okay, 18 to 20% kind of ROE expected over the next couple of years. Talking about the focus area for the hospital, it's a multi-specialty hospital. Are there any chances of the company narrowing its focus down to a particular area of medicine, or would you continue to be, that multi-specialty hospital and no particular area of focus in terms of medicine?
Yeah, it will continue to be a multi-specialty kind of setup. I do not see that they're focusing on one or specific therapy. Yes, some of the progressive therapies or tertiary, high-end tertiary like an onco or cardiac, that mix will slightly go up over a period of time, but it will be predominantly a multi-specialty hospital over a period of time.
Okay, just trying to understand what could be some challenges that could hinder growth for Jupiter going forward. Any concerns? Would competition be slow down its growth, or any other factors that come to your mind?
Yeah, so I think as you see, a couple of hospitals which are greenfield in nature that will come up, one in Dombivli and one in Pune. So generally greenfield, we have seen historically there are cases where it has taken more than 3 years also to break even at EBITDA. So that is where I think what currently we are building in 2 years kind of time frame to break even, and the comfort or confidence that we get is both the one Dombivli, the location, the micro market, it's pretty lucrative micro market, and they are the first private guys to come over there in a large setup over there. So not much competition in Dombivli per se. And okay. Pune, they are already well-established player and they are already doing very well. There is a brand awareness is there, so it should not take too much of time. So as of now, we are building in 2 years kind of break even and EBITDA. If this gets prolonged, then yes, that is the one risk which could impact our estimates.
Last couple of questions, really, Param. I want to just ask you, management has time and again said that they are looking at organic expansion, but are there any signs or, is there any scope of inorganic expansion as well going forward, or do you think they'll just look at growing organically?
Yeah. So if you see the historically the way this management operates, they prefer to have a greenfield setup so that they can construct the facility as per their own standards, and they have a better control on the profitability. So that is the way they have built up the 3 units which they have. So we believe that they will prefer more of like a greenfield expansion, inorganic only if that the facility, if the construction or the way this facility has been made as per their own standards, then only, or if it's getting a distressed valuation, then only they may explore the inorganic. But I think the priority will be more towards an organic expansion.
All right, that's about expansion. But lastly, what are your long-term targets on the stock, and how are you viewing this stock, or valuations wise when you compare it with its peers?
Yeah. So if you see, as I said, the EBITDA growth could be in the range of 20% plus for the next 4 to 5 years. It can compound in that range. So typically this space enjoys 20 times EV EBITDA on a 1 year forward basis at a consistent level. But given that the growth rate is slightly better as compared to some of the peers, I think there is a scope of multiples to get re-rate for Jupiter. So my long-term target is the stock can compound by 15 to 20% in the next 4 to 5 years on an annualized basis.
Okay, that's the long-term target on the stock. But with that, Param, I would like to thank you for taking out time and joining in, and helping us, understand in details the business model, as well as how really the valuations stack up where Jupiter Life is concerned. Thanks a lot for joining in, and of course, look forward to a longer conversation on some other pharma company with you pretty soon.
Sure. Thank you so much.
Thank you. Well, that was all about Jupiter Life Hospitals and how it stacks up in the healthcare space, how it can emerge as a good, healthy, bet for the next 5 years. But of course, it's not a recommendation. It's just, us helping you understand the positives and negatives surrounding a stock so you can make better investment decisions. You, of course, have to consult your investment advisor before making any investment decisions with regard to a stock. But with that, we are completely timed out on this edition of Stocks for the Next Innings. Until next time, have a great day, and of course, take care.